All right, look at that. Here is some of the positions of retail traders in the past. And if you take a look at shorts, you'll see that, we've seen positions up here above 21,000. Okay, above 21,000. And right now we're just down here. How's it going, fellow traders? Magic Trader here, and welcome back, welcome back, welcome back. We got another edition of the latest CFTC data that was reported last Tuesday and released to us on this past Friday. So let's start by taking a look at the snapshot of positions held by the big institutions. And if we look at the change column, what do we see? Big numbers on the downside for S&P 500. Also for oil, and we look at the US dollar, Japanese yen. What did I tell you was going to happen? Look at that, minus 67,000. You know what that's from? Profit taking on long positions. That's right. Who told you that was happening before it actually took place? Me. I told you they were going to start taking profits on long positions, and that was going to cause a drop in price. And now you see exactly that is what took place. So let's start like we always do by examining gold. Here we go. So gold, what do we see? Well, we see long positions. They're still very aggressive, so not much going on with that. And let me just outline that for you. There's your long positions here for gold. What is a 13-period average? It's 261,000. What are we at right now? 272. So they're still holding well above their average. But if you've been following our videos that we've been doing on YouTube every morning at 8 a.m. Eastern Standard Time, you'd know that we were talking about price settling down here at these highs, and that likely for the month of May, we would see price coasting sideways. So far, it hasn't been doing much in terms of price. We see a little bit of a drop in price and then a rally. But, we're for 12 days now inside May, so we still have another couple weeks. So far, it's sitting sideways, just like I said. So, I'd like to see near the end of the week what they're going to do with their positions. Right now, they got a slight bullish bias, just slight, okay? 79%. Yeah, even though they're 79%, the coloration of the cells, as you've noticed, they're not an aggressive green, all right? So neutral right now, somewhat bullish, but more neutral. I'm not making any significant moves on gold at this point because I don't think it's right or set up at this point for any significant moves. Let's look at retail sentiment. Last I checked, I see that they're about 60% short, okay, give or take around there. But 9,000 lots, that's their position, okay? So, 60%, that's not a lot. 9,000 lots, that's not a lot. There could be a lot bigger size that comes in the near future. But as things stand right now, when I'm looking at the coloration of the cells, looking at price action, it's made a big move. Now we're coasting sideways, likely going to continue for the rest of the month. And then we'll see what happens after that. Oil. So some profit taking on oil longs, okay? Price rallied up, and then they took profits on their longs at the highs, which is what fueled the move to the downside, okay? And as price is making this move to the downside, look what they were doing at the same time, increasing their shorts, okay? We went from very cooled off territory now to an aggressive 145,000. Not really aggressive, but considering where we've come from, that's an aggressive move. 145,000 compared to the 13-period average of 114,000. What does that tell you? Yeah, it tells you that they're very aggressively increasing their short positions. Now let me show you something else. Look at this coloration of the cells here, somewhat green, and it has turned into blue, more neutral. So neutral bias right now on oil as banks are taking profits on their long positions and as they are adding into their shorts. There's no demand until further down, so prices in the middle of the ocean, like I like to say. supply above, demand below, it's in the middle of the ocean. It can continue to drop if it wants to. I'm not trading oil this time. So that's all I have to say about oil. Now let's look at the US dollar. Look what it contacted just recently. It contacted an area of supply here on the weekly chart. It was once tested back here, and now we see it drop. So what's going on? Well, looks like they're reducing their short exposure right at this point. Longs, they haven't really been focused too much on longs. Yeah, they added some longs from, mid-March, but 28,000, nothing super aggressive. In fact, if you look throughout this whole column, it's never been very impressive, their long position, has it? Yeah, all we've seen really is, since the beginning of the year, a massive increase in shorts, which is quite strange because price has been increasing and rallying up on the chart while this has been taking place. Very strange. In fact, I've been pointing this out for quite some time, that the dollar is doing something very different than what we're seeing with the other dollar pairs. And I'll get to that very shortly. And when I do, I want you to pay attention to what I point out. Okay, let's go over to Aussie. So, Aussie. Remember, they've been very aggressively accumulating short positions and then profit taking on short positions. And that's what they've been doing over and over again. You remember the last time when price was down here and they were super aggressive with shorts, I told you they were going to start closing off those shorts and it's going to cause a move to the upside. I might have mentioned something like that in one of the videos here, or that was probably just something that I posted in the usual report for members. But members got this move from the lows all the way up here, and because the reason was that they were going to profit take on short positions. So as you can see, closure of shorts, 143, 139, 124, 113. Okay, 113. Could they continue? Yes, it's possible that they can continue. Now, one thing I'd like to point out is if we look at retail sentiment, let's look at the current number right now. It's 70%. 70% short at 5.3 thousand lots. Okay. And this is what's been taking place here. So if we look at the positions, what we see is that retail traders were short and are short at this point. 86%, 90, they got into the 90s up here. Then price tipped over. They started piling into long positions, and it didn't go very well for them because it started to curl up and then back down again. And we can see that now they're at 75%, give or take, around that area. But small numbers, okay? Not very large numbers at this point. So what's likely going to happen this week? Well, we have a bearish bias on the Aussie. So we'll see how this continues to play out. All right, let's go to the US CAD. So remember I told you about the US dollar-led pairs. US CAD led by the US dollar. But look, what do we see here? Long positions. Okay, remember what we were seeing under the dollar index? Not much with long positions, right? But look here in the US CAD, quite aggressive. In fact, if you look at the numbers, we were at 119. Not that far away from their maximum size of 137. And so what took place since then? Profit taking, 119, 112. They reduced greatly down to 96, and then just recently, this past week, they increased them back to 102. But the theme, which is the most important thing that I want to point out right now, is over these last 4 weeks, it's profit taking on long positions. Okay, that's the clear theme that is taking place. So if we zoom out and look, here we go. Profit taking on long positions. So there's the increase in long positions all throughout here, and then profit taking on long positions, which is fueling the move to the downside. Okay. And so now you're probably asking, well, what about retail positions? What did they look like recently? Well, the latest number that I have is retail's at 53% short right now. and that's with 4.8 lots. Okay, 4.8 lots. So that's not much. I can put that number in here. 4.8K, I should say. 4.8 thousand lots. So it's not incredibly large. It's nothing really crazy at this point. I think that we still got to wait and see what's going to happen with price action, because, you know, they're not very aggressive with their positions. Retail's not very aggressive with their positions, and the banks are profit taking. So it's not that the banks are accumulating a massive short, because they're not. They're just profit taking from longs. So it's not a really good time to get into a position when the big institutions who move price are just profiting from one of their positions. All right, so sitting on the sidelines is probably the better thing to do at this point. US Swiss, you see how it's the same thing. Longs have been aggressive. Okay, not much focus on shorts. Look at the 13-period average, 38,000. They're 51, well above. So really aggressive. And look at the percentages here. High percentage. Look at the coloration of the cells. Very green. So bullish bias. Okay, bullish bias at these highs. Have not contacted any supply. Nothing has been contacted. And what's their largest position on longs? 89,000. So we're well away from that. There's still room for them to add. And retail positions, 58% of their positions are geared to the long side. Okay, so no strong bias at this time. All right, so let's take a look now at the Euro US dollar. And what do we see with the Euro US dollar? So we've been talking about this theme of them taking profits on long positions. And you can see over the last several weeks, that's what they've done. Look at the highs from 213,000. Now we're down to 170,000. Okay. At the same time, if you look at short positions, numbers used to be 145. Now they're 166. Not a massive increase in shorts, if you can see. Okay. Not a massive increase. But the key is they're offloading longs and they're getting into short positions. So we have a bearish bias on the euro, but there hasn't been any short signals as of yet. Very tricky one. We got to be careful. In fact, in this past weekend's EURUSD report, I did a full article on the positions of retail traders, the dynamics that are taking place, the supply and demand that's been created, and the positioning of the institutions, and what we are specifically watching for in terms of a short signal, because we are not there yet, but we are just so darn close. So we're going to be paying attention to that this coming week and seeing if those short signals are produced. If we go over and look at the retail sentiment, the latest figure that we have right now is 71% short, and that's with 14,000 lots. Okay, 14,000 lots. That's not a huge number. Not really huge. In fact, you know, I could show you just a brief snapshot here of what the positions look like in the past. All right, look at that. Here is some of the positions of retail traders in the past. And if you take a look at shorts, you'll see that, you know, we've seen positions up here above 21,000. Okay, above 21,000. And right now we're just down here. Okay, and the drop that we got in price when it was up here is not that significant. All right, it's back here. So let me show you. This is this, and this is this. Okay, so you see the drop that we got. It was you know, somewhat significant depending on what time frame you're looking at, but not dramatic. Not dramatic. So positions are lower than what it was just recently. So what is that telling us? It's telling us a lot. I don't want to give away too much because, like I said, I just dealt with this in the EURUSD report. If you want the full report, you can become a member. Sign up for basic access, and it gives you access to our EURUSD report. All right. Next, pound US dollar. Let's look at this. They were aggressive with longs. They took profits on them and price dropped. Now they're acquiring short positions. Look at the coloration here of these cells. Okay, they used to be very green down here at the bottom, now becoming less so. Okay, you can see they're entering into neutral territory right now, so it's causing some momentum here, and the momentum can continue to the downside, because what it's telling me is they're offloading longs, getting into shorts, and the bias is switching. So we could be potentially seeing the potential for the beginning of a move to the downside. Okay, so I'm watching that this week, and as the weeks unfold. If we look at pound positioning right now, 62% short. Small numbers, 6,000 lots. Nothing to write home to. All right, US dollar, Japanese yen. Okay, now look at that. I told you guys, I warned you. I warned you what was going to happen. Banks were entering into massive long positions, near maximum size. I said they were going to take profits on those positions and it was going to cause a move to the downside, didn't I? And what did we get? Price enters into a supply zone, drops. Oof. And where does it drop to? Just doesn't drop randomly to nowhere. It drops to the demand zone that we had here. That's right. And then what did it do? Move up. You see how banks control price. It hits supply, it drops. It hits demand, it rallies. See why it's so important to locate these areas? Otherwise, how do you know where price is going to move to? So going back here, they took some major profits from 222 to 169. That's a big drop. At the same time, shorts. You think they're adding shorts? No, they're not adding shorts. So, US CAD, US Swiss, US Japanese yen, all accumulating big long positions, then profit taking, and now we see the drop. But we're not seeing any sign of them accumulating any short positions as of this time. So you see this reoccurring theme here, profit taking but not accumulating. That's right. So we got to be careful. We have a very nice bullish bias here, according to the coloration of the cells, but that's because we just made a significant move to the upside. All right. So retail sentiment, 76% short right at this point. 76% short. We can go over and look at the history of the positions, and you'll see this was that major spike up. Okay, retail traders were 83% to the short side. Okay, with 6,000 positions, 83%. Now they're 76% with 3,000. Okay, so yeah, you got to be careful with this one, because they may not be done accumulating along. Just saying. I got my suspicions that we're going to see more upside. All right, more to come on that. Kiwi, not much to see here. Longs, nothing going on there. Shorts are the steady one. Okay. Coloration of the cells. Look, they used to be just a tinge bullish here, just a tinge. And now we've got bearishness, just like we had previously. The bearishness previously was from October, November, December. All this year, as price rallied. Very strange. And then we had the bullishness here, and then bearishness, and now we see the drop in price. So, what's going to happen? What's going on? Hard to say, but the main thing that you should take away from all this is that there's a theme going on here. And that theme should tell you whether or not you should be investing, taking profits, or sitting on the sidelines. The Kiwi, 74% are short right now. 74% are short. All right. So if that number continues, then likely we'll see price turn over and head lower. And that is about it, my friends. I hope you enjoyed it. I hope this saved you from losing money in the markets this past week. Hope you didn't get caught long on the US dollar, Japanese yen. I hope you're doing very well out there. If you want to learn more about how we do this analysis, and you just want to increase your skills and increase your ability when doing chart trading, then join us, whiteoakfx.com. We would love to have you. We're just about to start a brand new level 1 class You need to join us because these classroom sessions, you'll get so much out of it. You're going to learn how to find the supply and demand zones, the trend lines, okay? Know how to draw the trend lines, the proper ones, not just the ones that you read in these conventional technical analysis books, because they've got it all wrong. Don't worry, but they do. So come and join, learn how to do proper analysis, and then you'll see a difference in your trading. All right, folks, that's it. Enjoy the rest of your day. We'll talk to you later. Have a good one.